Today it's Teachers' Day and we should be celebrating this day by getting on board Monika Halan, author of Let's Talk Money, to understand who taught her the ABC of investing and what are her key lessons learned so far. After that, we will help you splurge smartly in a matter of a month. Festive season will kickstart and you will rush to buy your new set of clothes or mobile phone, or maybe travel to get a break from office life. We will help you do all of that smartly with Ajay Avatne, founder livefromalounge.com. And later, we will speak to Amit Chabra, head health and travel insurance policybazaar.com, for a quick guide on how to pick a suitable health insurance for your elderly parents. Before we begin all of this, let's get on to the headlines. Gains more than 125 points to close above 17,650. All sectoral indices close in the green, with only 14 stocks ending the day in the red. Hindalco and JSW Steel top performers, as both gain over 3% each. The dollar index jumps above the 110 mark for the first time in more than 2 decades, while crude prices gain ahead of a crucial OPEC meet. The street expects OPEC countries to discuss output cuts. Meghalaya CM Conrad Sangma and another member from Goa say the group of ministers will seek legal opinion on valuation of online gaming, casinos and horse racing. Sources say the group of ministers is open to considering different rates and valuation mechanism, as all three games belong to different segments. Aditya Birla AMC may be in the race for stake in UTI AMC. Sources say the asset management company is looking to buy stake from PNB, LIC, SBI and Bank of Baroda, which together holds above 45%, valued at almost 5,000 crore. That's an ET Now exclusive. Votes on the streets and entire neighborhood waterlogged. This is India's IT capital. After a few hours of rains, weatherman predicts more light to moderate rainfall in Bengaluru. IMD says this is the wettest September for Bengaluru since 2014. So it's Teachers' Day, and who better than Monika Halan to start the show with? We have Monika Halan, author Let's Talk Money. And Monika, welcome to the show. First of all, wish you a very happy Teachers' Day. A lot of us have learned and are still learning a lot from you on anything and everything related to money making. But now to ask you, where did you get all the learning from? Who's been your teacher or an inspiring figure to reach where you are now in your space?
Kavita, it's an excellent question. And at least for me, there hasn't been this one person, but there have been a series of people who have held my hand and helped me along the way. And I think that's really true for a lot of us, that at every stage where you are at, somebody will appear and help you to the next stage. So whether it was a very good editor when I was in Economic Times 20 years ago, who helped me through a difficult period, or when I took a baby break and went into training, there was Dr. Uma Shashikant, who really taught me a lot about basics of finance. And then as you keep growing, different people will come in and go, but the continuum of people helping has always been there. And one thing that I want to say is that what also really helps is to have a very deep personal anchoring. Whatever it is that you believe in, whatever faith that you have, each one has their individual, paths towards this. But whatever it is that you have faith in, if you have that internal anchoring, that becomes a very deep part of your own learning. So it's very abstract, my answer, but that's what it is really, truly, Kavita.
All right. So, talking about teachers and especially people who mainly since the pandemic have emerged financial gyans, financial gurus, and keep giving you all the tips and tricks to make your portfolio. It's actually easy for anyone who is new to this area to fall for it for returns and for promises that are made for gains and returns on the overall portfolio. Very important it is to know what kind of people should you actually weed out, because there's so much of information bombarding going on, especially on social media. Whom to rely on, who's a genuine advisor, planner, how do we just weed all these people out, especially from social media?
Kavita, if somebody is very aggressive in their messaging, saying that this is the only way to do it, or all FTs are bad, or all, if there is a very strong opinion and somebody is steering you towards a particular product, then that would be a red flag for me, unless it is backed by a lot of research and arguments, right? So I would say that anytime that you sense a hard push, anytime that you sense that this is too good to be true, the advice which is coming that you'll double your money in 3 years, equity doubles your money, or this crypto coin will make your 50,000 into 5 crore. So these are the sort of messaging which should be a red flag that there is really no easy money to be made anywhere. Good investing is patient. It is not instant noodles. It is a very slow cook. So anything which is hustling you, even in the messaging, I would be careful of that. So again, I'll say, listen to that little voice which is saying, this is too good to be true. So listen to that. Don't get hustled. Don't get drawn in. Don't get shamed. Don't get pushed. Don't let somebody tell you that if you're doing this, it's all wrong. Maybe you're doing it because you have a good reason. So you should take a moment to step back and say, what is this advice? Does it work for me personally? I mean, look, the diet of a 17-year-old and the diet of a 70-year-old is going to be different. Financial products are the same. So it depends on who you are, what stage you're at. Does that really work for you? So again, take a moment, think about it, and then decide whether this advice which is coming your way is actually on firm foundation or it's just a social media influence.
A lot of investors have this fear of FOMO, the fear of missing out, and most of the time investors feel that their right time to invest has passed away, has gone. How does one tackle with this?
Yeah, so FOMO is one of the things in finance which will cost you a lot of money. There is no product which you will miss out on, which is worth investing in. There is no right time, for instance, to invest in equity. So I'm that old that I have said I have met Mr. Sensex at 2000. Okay, so I have seen the journey of the Sensex from 2000 to where it is today. It's taken all these years, but it's got ups and downs. So it really is about that, isn't it? That that's what you're really looking at.
To the question of how to identify your financial planner or advisor, what are the traits of a good financial planner? How should one actually select an advisor?
No, it's a good idea to know what the planner is telling you. So I wouldn't trust anybody blindly. So it's a good idea to have questions to ask of the planner himself or herself. One of the key tools in the hands of investors is to understand this concept of an asset allocation. I mean, these are words which are used very commonly, that build your asset allocation. But as an investor, if you really understood what that meant, which basically essentially is your division between debt and equity, which is the products which give you safety and the products which have risk but long term will give you return. Now, if your planner is not beginning to work on even making you understand the importance of your asset allocation that you have chosen, then I would think it's a red flag, because that's your key point. Because once you have fixed your asset allocation to say, I am a 40-60 investor, 40% debt, 60% equity, then you know when to rebalance also, isn't it, Kavita? That when equity runs up, then you rebalance. So you don't ever have to ask the question is it a good time to do this and that? So if your planner is not taking the time to explain basics to you and is sort of hustling you towards products immediately, that for me becomes a red flag. So the questions that you have to ask is, what, this portfolio, what is it going to do for my short, medium, and long term needs of money? Remember, it's about liquidity. It's not just about return. It is about having the money when you need it, and that money should not be at a capital loss. So your planner has to, unless he's explaining these things to you, you should really think seriously about what the planner is doing. Is he just an investment manager, or is she a financial planner? So that difference is important. The planner will take a holistic view, will think about your insurances, will think about your investments, your asset allocation, will put a very good estate planning framework in place. So a planner will do many of these things. So I would just go beyond investment managing into taking a full look at your entire financial life. So if the planner is not telling you these things, for me, that would be a red flag.
Go to a planner, you need to have your homework done. But then, Monika, with so much of unpredictability around, especially globally, what's your advice to the investor or for their portfolio, especially in the long run? Should you be revamping or rebalancing your portfolio, or just ignore the noise around and stay invested?
Kavita, you've been following the news for a long time. And doesn't it look every year the world is going to end? So for the last, ever since 2008, the North Atlantic financial crisis in 2008, I mean, every year since then, there's Brexit, something else, a war, tsunami, pandemic. So every year we've thought the world is going to end. And every year people have thought that, oh, maybe right now is not the right time. So again, I go back to saying that please understand products, and mutual funds are a great way for a retail investor to approach different markets, whether it's bonds, equity, gold, cash, combinations of these overseas. So you can have a lot of these products through this route. And once you have fixed your asset allocation, then it's simply the markets will tell you what you need to do. You don't need to decide. So the tool in your hand really is your asset allocation. And when, for instance, in March and April 2020, when the Sensex fell to what, 29,000, 30,000, that was the time that your asset allocation with equity would have gone down. Equity would have gone down. That was the time to buy more, even though it was such a scary time. So if you take your emotion and fear and greed out and just understand what works for you in terms of asset allocation, and then choose the products which work, which you think you can invest in with a fair amount of understanding, that's it. That's all that you do. It's actually very boring. You don't pay attention to what is happening to the rest of the world. It does not matter. It really does not matter, because either we will go, either there is a nuclear war and we're all dead, then in any case it doesn't matter. But if we aren't, then things will go on, and people will keep consuming, people will keep traveling, companies will make profits, those profits show up on the stock market, so life will go on,
Totally. Let's take this conversation towards millennials and their idea of investing. Millennials these days want to experiment, they want to innovate, and almost ready to take risk regarding their financial portfolio. Now, many have started to invest in various new forms of digital investments and themes. What do you have to tell them? Should they really be innovating their portfolio, or adding some kind of a spice by adding a new theme or an innovative investment theme? How should they go about it?
those are small slices of the portfolio rather than the entire portfolio. So unless you have, so even within equity, so you have your basic asset allocation, and within equity now you make a second level asset allocation, which is at least half of your portfolio is in index or a large cap fund. So whether you want to go the managed way or the passive way, and if you don't know these meanings of these words, then you're in the wrong product. So you need to really understand these products. And then you start your smaller slices of the pie with a mid cap, a small cap. And a slice of the pie, maybe 10%, 15%, could be some of these themes. So don't take one thing and put all of your money in it. It's a very risky thing to do that. So yes, you may quadruple your money, but your money could be reduced by one fourth as well. So this is what diversification means, that you are spreading your money across different parts of the market, and that slice of a theme or exotic product might actually bring your portfolio return up by a couple of percentage points. But this supernormal profit that you're aspiring for as a millennial, you will only get that if you do your own startup. Okay, that's your equity. But if you're approaching the stock market, you can get lucky. I'm not saying that people don't. People get lucky, and then they think it's something smart that they have done. No, they've just got lucky. So a far more sensible thing is to have different products in your portfolio, but a large part of that portfolio is in this very mature, safe part, which is large caps or a broad market index. And then you do return kickers in the rest of the portfolio, Kavita.
Monika, you have seen many market cycles. Now, according to you, what are the changes you are observing when it comes to investor behavior, and especially in women? And here we are talking about the pandemic and the post-pandemic phase. Any peculiar investment behavior that we can discuss?
So, Kavita, women, I find, are now coming out of that shell that we don't understand money. I'm increasingly seeing that women are keen, and if communicated to, without talking down to women, they actually catch on very, very quickly. They're very, very smart about it. So, I think little more push in terms of financial literacy to get women to at least be open to this messaging that you can do it. And in terms of fads, I think we've blown through this whole crypto fad last year, where this was the next new thing. And that actually is, that was just the liquidity created by the US and the Western countries, which sort of floated into the world, and it raised these are asset bubbles. It's a classic asset bubble story. So I think what has happened is they have tasted risk. Most of them have lost money, but I think they should take that as a lesson to actually get back to serious investing, isn't it? So it isn't that you get scared and you go back into buying gold and staying with cash, but having tasted something as volatile and as risky as a cryptocurrency, it makes sense to actually come to the regulated part of the market, which is the equity market, the bond market. Real estate is just coming up with the REITs, and then use some of that enthusiasm into investing in these markets. So, yes, every generation will see a theme which comes. At one point of one of my cycles, there was emu eggs. Okay, there was once potato farms, there was once tea plantations. So these, it will come and go. But all that I can tell the young people out there is that you have literally a very long runway. So even if you've lost money, it does not matter. You will earn it back. You're young, you're smart. But get into investing with a slightly more long term and more mature frame of mind, because that will make you long term money.
So, Monika, what has been your investment portfolio like, or what is it right now? Are you really ticking off your financial goals?
Kavita, so as far as I'm concerned, if you've read the book Let's Talk Money, it's exactly what I say in the book is what I do, which means that the only piece of real estate that we own as a family is the one that we live in. I don't like real estate as an investment in India for a variety of reasons. I think mutual funds are a great product for retail investors, from starting level to even HNIs. And then in terms of asset allocation, it changes from age and stage. And also, I think it's not fair for me at my age to give my own asset allocation out, because I am a very risk happy investor since I understand the products. So I wouldn't want somebody to use my asset allocation and go there, because that would not be appropriate. I understand the products. I know that if you just simply hold long term, even a small cap managed fund would do extremely well. Okay, it's extremely volatile, but I've seen it through cycles. I think it'll be really unfair. So all I can say is that my risk appetite is very high for my age. But it's a good idea if you don't understand products, or if you tend to lose your stomach when markets go down, then you should be far more conservative. So I think that it's fair to leave it at that.
All right, Monika, there's so much to learn from you, and every time we have you on the show, the time seems to be just passing by, but then we'll have to end this conversation. Thank you so much for being on the show and helping investors, educating them actually, and talking about investor awareness stuff. Thank you so much, Monika.